Let's take a look at some of the strategies that our guests have in mind today. Ruchit, Jain and Subramaniam are joining us. Ruchit, good morning. Let's take a look at the index first, and also, given that it's a fresh series, what's the kind of range or upside that you're looking at now?
Good morning, Abha. Overall, if we just observe the positional charts, and it's been almost 1.5 months where the markets are still trading in a range. Now, I won't give much weightage to what happened in last 1 hour in yesterday's session, being that being an expiry day. So I think some sort of volatility was there yesterday, but still, unless Nifty gives breakdown of the support end of this last 1.5 months range, I still think that the broader trend of the market is going to be positive only. The lower end of the range, the support is placed around 85.20, 85.30 levels. So I think today's trading session, it would be crucial to watch whether the index follows up with yesterday's selling and breaches that 85.20, 85.30 or not. Unless markets or Nifty breach this 85.30, 85.20 support zone, the broader trend still remains positive, and there is still higher probability that the bounce back would be seen from current levels. Definitely, the uptrend, the resumption of the uptrend would be only above the recent high of 8,700. So as of now, the trading range for today intraday would be 8,530 and 8,700 on the higher side. Now, Bank Nifty, if we observe, then last month, after giving a breakout from the range-bound trading session, the index is consolidating in a sideways range. The private sector banks, which constitute majority of the constituents of Bank Nifty, have not shown any signs of weakness or reversal in last couple of days. So I think this positive momentum in the banking index would continue, and that could lead to Nifty on the higher side once again from current levels. So on index front, I would recommend to go long at current levels, keeping a stop loss below 85.30. Only if 85.30 is breached, then the long view would be changed in the index.
Okay, what are some of the strategies that you have on your radar this morning, Ruchit?
Yeah, so among stock specific, I have a first call in as a buy in BHEL. We have seen that the stock has recently formed these higher tops and higher bottoms, and the stock is trading in a rising channel. Yesterday's outperformance vis-a-vis the market, we are expecting the stock to move towards the higher end of the channel, which is placed around 151, 152. So around current levels, one can go long in BHEL, keeping a stop loss below 135, which is a recent low, and a target of around 151 in about next 1 week. And my second call is a buy call in PTC India. PTC India amongst the mid cap has been an outperformer in recent past. You have seen the stock has given a breakout of a range bound trading action. The prices have also retraced some of the gains in last couple of weeks and are trading near the super trend support levels. So we are expecting resumption of the uptrend in PTC India from current levels. So one can go long with keeping a small stop loss below 75.50 and expecting a target of around 86 in about 3 to 4 trading sessions.
Okay, so those are a couple of the calls coming in from Ruchit. Let's also talk about some of the stocks that we're tracking today. Ruchit, we're going to keep an eye out also on Tata Motors, given that we're expecting numbers. What's your view on Tata Motors currently?
Well, recently you've seen, although the stock has outperformed the broader index, keeping in front this last 3 months or 4 months of view, but last couple of weeks the stock has not done that well. The stock vis-a-vis the other stocks that have performed, the stock has in fact remained sideways or corrected marginally. Now, if you observe the longer term charts, then there is some sort of rising wedge pattern formation, which is not a positive sign for the stock. For intraday today, 488 remains a crucial support for this stock. In case the stock breaches below 488, then that would be a breakdown of this rising wedge, which has been seen on Tata Motors as well as Tata Motors DVR also. So 488 would be the crucial level to watch. In case 488 level is breached, then I think the stock could correct further in near term and move lower towards 471, 472. So in case if anyone has been long positions in Tata Motors, keep a strict stop loss below 488. Below 488, the stock is likely to head lower towards 471.
Okay, let me also welcome Mr. Subramaniam. Good morning, Mr. Subramaniam. How are markets looking to you first? Let's get a check on that, because now we're entering, the September period, festive season, and also, of course, overseas active because of elections in the US and so forth.
Yeah, going by what we have seen in terms of the roles for the September series, the beginning definitely seems to be pretty optimistic, and we also saw some good cost of carry, which was which indicates that the bulls are very much inclined to take the market forward. But yesterday's sell-off, I think some unwinding, which in a way I think could be because of some global news. When we have a Fed announcement which due overnight, and we could see some near-term volatility. From that aspect, I think 8500. I think that's the level where we have seen some pretty decent put rating also. So broadly, I think it could be more of a script specific market, but I think banks and financials will hold the key because they have been the outperformers in the August series.
Yeah.
So keeping that in mind, I think that will be the space that I will be keenly watching it for.
Okay. I noticed that you have a call on PTC, and I think Ruchit had a call on that too. So what's your take on that, and why is that looking good to you?
Well, PTC interesting counter. I mean, counter which has come into the radar suddenly, and we see some pretty decent rolls in PTC, and we have also seen some breakout of the charts. So that seems to indicate that we could see some upside coming about in that counter. So modest target of 84 has been kept, wherein one could do some buying for it.
Fair enough. What are some of the other names on your radar this morning, Mr. Subramanian? Noticed quite a mixed bag on your list. Just run us through what's looking good to you.
Yeah, to begin with, Indiabull Housing Finance. I think the housing finance counters have been doing well. Even LSE has been doing well. Indiabull, even yesterday's sell-off managed to hold on, and we did see some spike coming about.
Yeah.
So that possibly could be heading for targets of 845. One could keep a stop loss of 810. The third one is Gail. You know, that's seen some pretty decent rolls, and it's seen some pretty good bottom formation. It went up to levels of 400, retraced, and now it's sort of consolidated and again getting back to heading for some upside. So probably we could expect levels of 385, 390. We recommend a stop loss of 358. And besides then, of course, some couple of short calls also, where I think we could see some near-term downside, likes of ACC, where we could see some bump up to maybe levels of 1660, 1670, where one could initiate a short. Keep a stop loss of 1700 and a stop loss and a target of 1600. The last one, L&T, has seen some breakdown in yesterday's and could be a bit sluggish, and probably could be heading for levels of 1400, but stop loss of 1500 is also recommended.
Okay, Ruchit, let's get your take on some of these oil and gas names as well. Mr. Subramanian, that's sounding very positive on GAIL. We have seen an up move across some of these oil and gas counters this week.
Yes, GAIL definitely looks positive from current levels. If you observe, since the start of the month of May itself, the stock has traded in a range of 360 to 400, and after testing a recent high of 400, prices have again retraced back to the lower end of the range. So, in case even if there is no directional momentum and the stock continues to trade in this range, then the prices are now currently trading at lower end of the range, which gives a good risk reward ratio to go long. So again, expecting a target of around 390 to 400. One can go long in GAIL at current levels. One can keep a stop loss below 360 in this stock.
Do you also see a cooling off in some of those cement stocks, Ruchit? Again, we have seen quite a bit of a run up on plenty of them. It's been a good week actually for cement.
Cement stocks, I think there could be some sort of consolidation seen in stocks such as ACC, Ambuja Cement. But I think the mid-cap cement stocks would continue to do well. If you observe the charts such as India Cements, and on a elite wave basis, the stock is trading in a wave 3 now, if you observe weekly or monthly charts. So I think this positive momentum now still would continue in the mid-cap space for some more time, whereas the large-cap stocks such as ACC and Ambuja could continue to remain in the range now. ACC specifically recently has formed a first of a lower top around 1700. So I think it would be crucial now, unless the stock crosses again above 1700, some sort of corrective move or consolidation could be seen in this stock. So expecting a consolidation, and on the lower side up to 1600 to 1700, this could be the range in which it could trade. Ambuja Cement definitely in recent, it has already consolidated recently, and looking at the charts 255 to 275, I think the range has been established in this stock. So among cements, large cap stocks could consolidate in near term, whereas mid cap cements could move further higher in short term.
Okay, Tata Motors, Mr. Subramanian, let's get your view on Tata Motors as well.
Well, I think we have seen some high volatility in the last couple of months. Brexit took it down, I think, to all the way to levels of 425. Again it bounced back. But it has been seen some sort of struggle above levels of 510. And with the results down the corner, I think we have seen a bit of nervousness coming up on the counter. So my sense is that we could probably see some more downside, maybe levels of 470, 475, where I think we could see the short covering again emerging. And broadly, I would be looking to buy it at declines and look out for those levels, which I think ideally should be attained today.
All right, so that's Tata Motors this morning. Let's take a look at just a few of the other stocks that have been in news lately as well. We've also had a fair amount of action coming in, for instance, on some of those select mid-cap infra names, not always a popular segment of the market, but, we've been, whether it's on the back of fundraising news or NCDs or order wins, but there's been a little bit of buzz. Would you start to take a look at any of those, even from a trading perspective?
Well, in fact, my favorite has been JP Associates. Last, I think, couple of months, we have seen that stock spiking up, and yesterday's setup also seems to be indicate that after all the more correction that we saw, it could be heading up. Then also something like a GMR Infra, where they're also, so these are all stocks which are getting back into some sort of focus, and we could definitely be more so in the background that we have already seen such a huge run up in many of these mid caps, and I think we also saw some pretty decent earnings. I think a couple of days back in some of the mid cap infra stocks. So that is definitely leading to some sort of buying interest coming about.
Ashu, good morning.
Morning, Ava. She's running a little late, but morning, Ruchit. A couple of stocks on the mid-cap side where the charts are pretty clean, but what do you think if there can be a day trade here or longer term? V2 Retail, Menon Bearings, Sarda Energy, Orient Paper, Exchanging Solutions, Philip Carbon. Actually, I hadn't noticed it for some time, but very clean charts there also. Your thoughts?
Good morning, Ashu. Would take some of the stocks that we have recently liked. One is Orient Paper. Orient Paper, this stock has been recently forming higher tops and higher bottoms. And what yesterday's trading session we saw, that was just a continuation of the uptrend. So I think this positive trend would continue in this stock. Even at current levels, I think one can keep a stop loss below 62 rupees and continue to be on the long side. On the higher side, I'm expecting a target of around 80 to 81 in this stock. As far as V2 Retail is concerned, not tracking that actively. But yesterday's, in fact, last 2-3 trading sessions, we have been seeing some positive momentum building up. Now, what positive thing is seen in this stock, that the volumes, usually it's a low volume stock. We normally do not see such high volumes coming in this stock. But last couple of days, in fact, last 3 trading sessions, when the prices are moved higher, the volumes were much higher than what the normal volumes are there for this stock. So I think this is one of the breakout candidate, and if this momentum continues, then the stock could head higher towards about 96 or 98 levels. Don't have any very aggressive targets in this stock, as I said, as the volumes are usually low, but still 96 to 98 could be seen in this stock in short term. Philips Carbon, Philips Carbon, if we observe about a bit positional charts, then definitely the trend is positive. Since the month of Feb, and I think last week of Feb itself, the stock had formed a bottom around 81, and since then it has continuously been moving higher. So that's just a sign of continuation of the uptrend. On the higher side, the stock could go up to 250, 255. So would be positive on this stock, Philips Carbon. Any existing positions could be held on with the stop loss below 203.
Ruchit, I want to take 2 different chart patterns so that we can see what kind of activity there is, and if we can just bring up GVK Power and Natco Pharma. Ruchit, the basic action there was one big jump, and the stock then just went quiet, which means either there's some institutional buying or there's some lot buying, but it wasn't continuous buying through the day. If you can just talk about these 2 particular stocks, GVK and Natco Pharma, and then Escorts and Engineers India, where the chart is actually very, very smooth, especially for the last, let's say, 3 to 4 months. Maybe a totally different chart pattern, if you're trying to differentiate between the kind of pattern we are dealing with.
Ashu, most of the mid-cap names, if we see last 2 or 3 months, what they have done is that those mid-cap stocks which have not performed in this recent up move since the month of March, we are not seeing any sort of pullback or any sort of major up move in those stocks. So even if the market continues this upside momentum from current levels, then I think the strategy would be the same. Those who have outperformed the markets or those who outperformed the overall mid-cap index, they would continue going higher. And those who have underperformed, so rather than bottom fishing in those stocks, I think they would continue to remain under pressure, or any sort of bounce back rallies also if comes in such stocks. I don't think there would be change of trend overall if the trend has not changed in the last 4-5 months of market. So GVK Power is one of the stocks which have underperformed recently in the markets, and if we just observe the positional charts also, then there would be many retail traders who have already stuck in the stock at higher levels. So as we see any sort of pullback rallies, I think the selling pressure would come in this stock going ahead. Technically, for short term, around 7.5 to 8, the resistance would come in. So I won't bet going on long positions in GVK Power at current levels. Escorts is one of the stock which has been in an uptrend. We have seen that after giving a breakout couple of months back from the resistance of 220, the stock has continuously moved higher, and I think the outperformance could be there over here. Although momentum readings are trading in an overbought zone now because the stock has rallied quite stiffly, but still I think unless there are any signs of trend reversal on the price charts, this positive momentum is expected to continue, and on the higher side 345, 350 could be seen in the stock in near term. Now one of the stock which you mentioned has been Engineers India. This stock has recently come in the limelight in last couple of weeks. We have seen good volumes coming in over in this stock last couple of days. I think in spite of prices already at higher levels, there was a good volumes. So this momentum could be continued on the high side. 280, 285 could be seen in this stock. But I think Engineers India is one of the stock that one needs to look for a medium to long term portfolio rather than just short term trading. For short term traders, 230 could be kept as a stop loss on long positions. But in case if anyone is a medium to long-term traders, very rarely you see such uptrend, and after an up move also very huge volumes coming in. So that's clearly a sign of accumulation by medium to long-term investors, even at current levels. So I would be positive on Escorts and Engineers India from current levels also, whereas GVK Powers would definitely avoid the stock.
Okay, let's take a very quick break. Got lots more, many more stocks to discuss. In fact, after this, we'll be back in just a moment.
You're watching Dealing Room, and of course there's some news on Biocon Mylan's cancer treatment drug has been accepted for review by a European regulator. Kiran Mazumdar-Shaw, Chairman Managing Director at Biocon, is with us. Kiran, good morning. Thanks for taking the time to join us. May I request you to just walk us through what this means and what could be the timeline in terms of it hitting the financials?
Well, this is a major milestone for Mylan and Biocon because, the start of a review process signals a high probability for market authorization. And this would, this also has the high probability of being the first biosimilar trastuzumab to enter the European market. The global opportunity for biosimilar trastuzumab or trastuzumab as a product is $7 billion as we speak. And obviously we would have a first mover advantage if we were to get marketing authorization. So, you can see why we are excited and why we believe that this is a very major accomplishment on the part of both partners. We had recently presented very credible data at ASCO on the same molecule, and therefore we believe that this would be a very big opportunity for both partners.
Good morning, ma'am. So as you're saying, this is expected to be a major positive. So if you could just tell us what's the kind of timeline that it will take for the review process out for this product?
So in Europe, it typically takes anywhere between 9 months to 18 months to review a dossier such as ours. And, we obviously also plan to submit a similar dossier to the US FDA shortly. And that process typically takes between 18 months to 24 months. So I think, the real big ramp up that you can expect in sales of this product would actually commence at the very earliest in a year's time. But I think in the meantime, we are very successfully beginning to market our biosimilars in ROW markets. And these markets are also fairly large. As you know, apart from that, glargine, our insulin glargine, has been approved in Japan, which is also one of the very highly regulated markets. So I think the companies are really excited about the huge opportunity that they're addressing for all our biosimilar pipeline. And the fact that we are likely to be sort of first movers in this space also is very, very important.
Okay, so is it right to say that for this anti-cancer biosimilar, post-Europe, you will be submitting it to the US, and will you be looking at Japan as well then?
I mean, Japan is of course one of the markets that falls under the regulated market category.
And in terms of the size, as you mentioned, it's close to around $7 billion market size. So is this market size only pertaining to Europe, or this does include...
Global.
Okay, so $7 billion is the global market size.
The person you are speaking with has...
Okay, technology failing us a little bit there, but we did, of course, get a sense from Ms. Shaw about how big this really could be for Biocon, something they've been working on for a while. And as she said, once it's entered this stage, the likelihood of it being approved is very high, and it would definitely give them a first mover advantage as well. Let's get your take on Biocon, Mr. Subramaniam.
Well, I think that's been the one stellar performer in the pharma space, and this could be a huge trigger for the counter. And I think we could see a sharp spike up, maybe to levels of maybe 900 to begin with. And as and when this actually taken forward, it's whatever the indications coming from the management, product definitely seems to be a high revenue generating one, and we could see some serious re-rating coming about the counter.
Right.
Right, Ruchit, would you choose a Biocon or an Aurobindo Pharma? How would you stack the two against each other?
Well, very difficult to take a call because both the stocks have been showing much positive direction. Biocon, if we observe in the last few months, the stock has been forming an impulsive up move, and whenever usually the stocks are an impulsive up move, the uptrend just goes on continuing without meaningful retracements. So that's why we are not seeing much meaningful retracements coming in the stock. So I think this uptrend would continue. Technically, initial resistance is there around 895. So in case in today's trading session, if we see the stock, or in near term, whenever we see the stock crossing 895, the next target on the long term charts would come around 970. So definitely trade with positive bias on Biocon. Even Aurobindo Pharma recently has done well, and we've seen the last 3 trading sessions after these results were out for the stock has moved higher with very good volumes. A bit of resistance around 810, but I think once the 810 is crossed, the stock would again resume that uptrend and would move higher towards the all-time high or recent highs of 890. So I would keenly watch 810 resistance in Aurobindo Pharma. In case the stock takes out about 810, one can go long after the breakout, keeping a stop loss below 795 for target of 885. Whereas in Biocon, this uptrend I think would continue.
All right. So, if you have a paper and a pencil, please do keep notes of, all the things that go on, because one of the best things you can do is to maintain a diary of your trading. Just watching stuff for 24 hours and hearing 400 stocks not going to get you anywhere. I guarantee you, human brains are only meant to deal with 6 pieces of information at a time. Even if we were Albert Einstein, we couldn't deal with 8. So dealing with 400 recommendations in a day, wow. I mean, maybe it's good for the history books, but that's all it'll be. So let's start with the Nifty. Look, there is a serious problem with the Nifty now. Till yesterday, my thought was that maybe it starts to kind of stabilize. But what are we getting on the Nifty right now? Can we just take a look at it? Can you bring up the Nifty? If it starts, see, first of all, if it starts to crack below, let's say 8600, 8580. Then there are serious questions of whether there is a temporary pause to the rally. Is that enough of a retracement to say the markets have turned down? No, absolutely not. But we'll have to keep a watch. So if it starts to pick up again, 87.10 is what you'll have to watch out for at the moment. Now let me just come to Biocon for a minute. See, you need to separate stocks like Biocon, Aurobindo, Glenmark, Dr. Reddy's, Lupin. This is not some, BEST bus. If you miss the first bus, just get into the next bus, then get into the next. No, it doesn't work this way. So first of all, when you say, okay, Biocon is going to do this drug, you ask yourself, have you really understood what this biosimilar stuff is? Do you really know how much of the revenues will come in a year? Biocon has moved from 465 in 2010, let me just give you the exact numbers, to 865. That's a 100% return in 6 years. So give or take, let's say it's about a 12-13% return on the stock. But it's got a price earnings ratio of 30. So please ask some basic questions before, oh, now the drug has come out and boom. Here the promoter herself is saying it's going to take 9 to 12 months. And then what is the price at that time? Remember, this is a generic. This is not a innovation. So a generic price can always get impacted by others filing for the same thing. Now let me come to the second group of stocks, tea. You see, I'm really baffled why tea stocks are moving up. Now, either, first of all, the tea crop has been very badly hurt. So when people say prices are going, yeah, but when prices are going up, if it's a Maruti or a Mahindra and Mahindra, they have to produce cars to sell now. If they don't produce cars, it doesn't matter what the price is. So the same is happening with tea. If there is no crop, what are you going to sell? That is the same thing that's happening with sugar. Why is the price moving if the crop's been hurt? Why is the price moving? Please think of these things. Otherwise, you're going to end up losing money just based on what we are doing is we are basically saying there was no history to the world till 3,000 years. We've just started today and now the price should go up. It doesn't work that way. Same with Biocon. Please read yourself. And before a drug is finally launched, there are 10 guys who get into the market. Something else may come out of it. Who knows? Anyway, let's take Welspun. Do you have a Welspun's chart? See, Welspun is a totally different ball game. Now, I start hearing, oh, it's cheap. Cheap compared to what? I don't know. Is there a problem? Certainly there's a problem. Is the stock going to go down more? I don't know. But see, this is a personal product. This is like when Chinese toys have some kind of a toxic thing and somebody sues them in the US. Right now, it's just a company cancelling an order. But I don't know how many people have used that towel. Do they have a problem with it? If they have a problem with it, will they create a personal lawsuit? I don't. So when you have this kind of uncertainty, as I gave you the example yesterday, 20 rupees for good apples may be fine. If the apples go rotten, even 2 rupees may not be good enough. Maybe they should be thrown. So just think about it. Please don't just buy stocks just based on, it's cheap, it was cheaper than yesterday. Has no meaning. So just your quick thoughts, Mr. Subramanian, on Welspun India.
Well, clearly your point is well taken, and there's no point in bottom fishing. Just based on the fact that it has collapsed from 100 to 55, and I think there could be more than that meets the eye. And as you mentioned, unless we have some sort of clarity coming about from the management or some sort of semblance of confidence coming about on the counter, one might be, of course, better off keeping away from the counter. But of course, some news from the management, I think, would be welcome at the current stage.
Okay, we're just watching out for some of those pre-open quotes to start kicking in. I'm still waiting on those at the moment. But let's get Ruchit in as well on. Okay, we've just got the pre-open quotes coming in. So Tata Motors is up about 1.5% ahead of earnings, and Pharma still looking good. So Lupin, Cipla this morning. Couple of those counters there. On the downside, I'm just going to take a quick look at where the pressure is coming in. BHEL continues to trade weak. ITC, Infi again continuing to lag. Those are a couple of the names there that immediately stand out. But advanced decline ratio tilted towards a positive, and the Nifty at about 8614, just a marginal uptick coming in there in the pre-open at this point of time. All right. Ruchit, I just want to come back to the levels that Ashu was also mentioning in terms of the downside support levels also that you're tracking right now. The Nifty has been stuck in a very tight range, and do you see more risk to the downside at this point, given that there could be other factors, even global factors, that could play spoilsport over the next few weeks?
Yeah, but as I earlier also mentioned in the start of the show, one needs to look what is the broader trend of the market. So the broader trend of the market last 1.5 months has been sideways, but if you observe last 4-5 months or 6 months, then definitely the broader trend has been positive. So in such positive trend, whenever the markets go sideways, people usually go and preempt the signs of reversal, that yes, the markets would reverse from here since the markets are not going up. Let's not forget that there are two type of corrective moves in the market. One is price correction, one is time correction. Even if the market stays sideways and again resumes its uptrend, then that is a sign that the index has corrected time wise rather than giving a price correction. So I think rather than going against the trend and preempting any sort of reversals at current levels, let the market give breakdown of this last 1.5 months of trading range. Only if there is a breakdown, and also that is not much far from below. We are not saying that at current juncture market is at such a level that after 200 points of downfall the breakdown would be there. The breakdown would be there just after about 20-30 odd max to max 50 odd points of down move. So I think unless market gives a breakdown of this 85-40, 85-30 support zone, one needs to be bullish on the market. We are not bearish unless there is a breakdown of this range. Only yes, if supports are broken, which are not much far, 50-60 points lower from current levels, then only I think the positive view needs to be changed. Now coming on the higher side, definitely as Ashu said, the resistance is there around 8700, 8710, and the momentum would pick up only when this 8710 is crossed. So the range for the Nifty still remains the same, 8710 on the higher side and 8540 on the lower side. On either the range breakout comes, I think the directional momentum would come in then only. So traders need to focus in this range and trade in the direction of the breakout whenever the breakout is there.
Right. I was reading some of the comments from the Reserve Bank of India. Essentially, they're talking about reducing government stake to below 50%. I think that's brilliant. If by an auction process the government can sell off the PSU shares, look, it gives a ready-made base to a good management, and they can just turn it around. And a classic example is Ratnakar Bank. I mean, who knew Ratnakar Bank? And then they hired this gentleman out of, I think, Bank of America or one of these places. And you see what happens to the valuation. So if they do that, you could have a significant upside on bank. Just the government's intent that they plan to do it would be enough to get these stocks rolling. Just your thought, Mr. Subramanian, because the RBI is pretty much suggesting this, whether the government takes it or not. But, what better way than to auction off the stocks? You get lots of money into your exchequer, and the only issue seems to be management, because these banks have enough in terms of legacy, trust, reputation, all that other stuff.
I think definitely the government probably taking the right thought process forward. I mean, classic case where I think I would probably that reminds me something like an MTNL, where I think they have been holding on for such a long time, and now we have reached a stage where probably the disinvestment doesn't make any meaningful sense. So I think wherever the government intervention, maybe for some strategic purposes, different purposes, one could hold on to certain stakes. But barring that, I think they are better off selling off some of the stakes and get some fresh thought process coming about with some professional management, which would make more sense for the companies to be flourishing in the future.
Okay, Natasha Shankar also joining us this morning. Morning, Natasha. Markets have been in this range. We are, the tail end of August. Summer, of course, coming to an end. We're entering September. Are you hopeful that we might see some renewed flows, or are you expecting things to be a little cautious as we see how things play out in the US?
So I think a big factor to watch out for would be the meeting. The notes of which would come out sometime today as to what is US's intent as far as the interest rate trajectory is concerned. Although the global markets really do not permit a rate hike as of now, but what happens in US is something that needs to be watched out for. But post that, there should be a pickup, at least inflows as far as the Indian markets are concerned, because we have the festive season which is just around the corner. The monsoons have been pretty good as well, and the payout related to the 7th Pay Commission would help to drive consumption as such in the economy. So we do expect the festive season flows to start from sometime probably mid-September onwards, and that would help to give a big boost to the markets.
Right, Ruchit, just getting into some of the smaller stocks. I just wanted to go back a little bit on the trends that have been originating, let's say, for a week or for a month. You've seen a number of auto ancillaries, UCal, Pricol, Rico, JBM Auto, but I don't see a similar trend. So I can't say there is a sectoral move here, Ruchit, but some of the stocks are pretty strong. Harita Seating, it could be whatever. Your thoughts on auto ancillaries, and where do you find the strongest day trading momentum and maybe a longer term momentum?
Well, Ashu, one needs to be very stock specific in this, very stock specific over here in this space. Because I don't think, as you said, even I don't believe that there's a trended momentum in the entire sector. So I think there would be more of a stock specific momentum. JBM Auto, for a day trading perspective, needs to be looks to be quite good. The stock has recently given a breakout above the resistance of 171 and 172. Last couple of days, the stock has again remained sideways, but then I think this positive momentum would continue. In short term, the stock has potential on the higher side to go up to 215 levels, and even on intraday perspective, if this recent high of 202 is crossed, and 210, 212 could be seen. So amongst all these 4-5 names, I think JBM Auto looks to be quite positive for day trading as well as short-term perspective.
Okay, so on opening, as expected, Tata Motors up 1.5%, index is just up 0.2%. We've got Bharti Infratel, Tata Steel, Hindalco, some of the movers. Ultratech is also climbing. GAIL is looking strong so far. ICICI Bank and Reliance lending some support, up about 0.5%. Lupin and Tata Steel, Hero Motors, some of the other names there. So obviously commodities this morning seem to be in favor, and also some of those cement names that also seem to be moving up. Sun Pharma, Dr. Reddy's, Lupin, so clearly Pharma also, but again the gains are marginal, not a runaway gain as such. On the downside, we do have sitting out today, Bank of Baroda down about 0.5%, Yes Bank, BPCL, BHEL, Idea, L&T, SBI, Infosys is another one, Kotak Mahindra Bank, HDFC Bank, Axis. So banks are clearly lagging, and that's one pocket of the market where we're not really seeing too much of action at all today. ITC is just flat or just a marginal uptick so far, not too much to write home about at this point.
However, we have some very interesting stocks. One is we may be seeing a breakout coming in Hindustan Construction. Has it broken out already? I don't know as yet, but that's an interesting stock to watch out for. See, as I said, if you fully comprehend what's happening in Biocon, by all means go and buy, or just follow the technicals. Or the third way, if you don't comprehend what's happening, is let the first 4-5% gain go. Let some institutions first decide whether what is being said by the management actually translates into a huge amount of gain, or does it really mean, like sometimes somebody says, well, I have an order. Well, when is the order going to be executed? When is it going to your financials? I mean, it's not exactly family, right? It's just a stock you own. So it's got to show up in the stock's price, and sometimes it shows up after 24 months and you change your mind by then. So just please watch for that. Kesar Terminals, one of the reasons I'm bringing this, first of all, it's owned by Kesar Enterprises, but more importantly, they're actually storing petrochemicals, crude oil, and all kinds of other, so it's a really liquid supply chain. I think many of the terminals are Kandla, and this stock's been strong, so I'll talk about it technically with you. Arman Financial Services, I think HDFC Securities or somebody was doing some conference, so you'll see some of these financial stocks move up, because obviously if a number of investors are being shown the stocks, who knows. Mandana Industries, it's been on a freeze. One of the things, Abba, we have to start looking at, and I know there's an initial hesitation, and the same was with PSU banks, is what's happening in steel. Steel prices globally have actually moved up 123% in a year. It's one of those, like Lake Placid, the crocodile is just coming from the back. You just don't notice it till the time of boom, it's right there. So steel stocks are something we may have to just look at. Bhushan Steel, Uttam Galva, Jindal Steel, Visa Steel. Does that mean something changed in the fundamental? I don't know, but the charts certainly have changed. And if sugar can go up 7 times because sugar prices are up 96%, but certainly steel can go up 1 time if they're up 123%. There's got to be some justification for why things are moving, right? Both are commodities. So anyway, keep that in mind. Maybe it's the debt, but so are the sugar companies in debt. But anyway, we'll talk about it. Mr. Vanima, your quick thoughts on steel. I'm not talking about a change in cycle, but I'm talking about something lying at the bottom of the ocean and maybe at least coming up maybe 5 inches.
Well, for the immediate short term, I think the commodities might have run into some sort of block, in the sense that many of them have reached some sort of overbought levels. So definitely the trend seems to be very positive, but probably for the September series, we could see some sluggishness, some profiting coming about. In fact, I would like to see some sort of consolidation coming about in many of these counters, like of Hindalco, Vedanta, Tata Steel. Of course, Tata Steel has already gone down quite a bit. But I think I would like to see some sort of profiting and some consolidation before the next up move.
All right, that's Tata Steel. Let's get a quick check from you as well on Tata Steel, Ruchit.
Yeah, the overall trend for Tata Steel, although remains positive, but I think some sort of corrective action needs to be there now before again entering into the long trend. We have seen the stock has recently formed a rising wedge pattern, which is usually seen at the end of an up move. So I'm not expecting any major trend reversal, but a corrective move from current levels could be seen. So even if a minor pullback comes, then I think the stock would now face resistance around 390 or 395, and on the lower side, the stock, in case if it corrects up to 350, then I think those would be good levels to enter into long again. So the broader trend remains positive, but won't suggest to go long at current levels. Wait for some sort of corrective move, not immediately, but maybe in next 1.5 months, in case the stock again corrects up to around 350, then I think those would be good levels to enter into this long trend in Tata Steel again.
Right, so finance certainly is very, very hot right now, so I'm going to take a couple of these stocks for you. First of all, it's CRISIL, ICRA, CARE, all rating agencies. Okay, so how does this work? Okay, we'll just look at the charts and we'll not get into exactly. I mean, they basically charge a fee, right, for ratings. So, I mean, unless India has just opened 6,000 new companies, I don't know. But anyway, it really doesn't matter because there's not much of a float in these stocks, so we'll just deal with it. Muthoot Finance, Manappuram Finance, IOB, Bajaj Finance, Syndicate, IFCI. I even saw a stock called VG Finance. Please don't ask me what it does, but I'm sure it's some kind of an NBFC. That's also moving up.
All right, we'll come back to some of those financials in a second. Back on some of the top movers today. Natasha, let's get your take on it as well. In the news this morning on the fact that the EMA is going to review one of the anti-cancer biosimilars. So Kiran Mazumdar sounded very excited about the possibilities on this front. Biocon or otherwise, are you looking at that stock in particular? What do you feel could be the upside given its progress on this front?
Let something materialize. That would be my suggestion, because these things usually take a long time to actually fructify into any plausible results for the companies, and it could actually go the other way as well. What if it gets rejected? So that could be a big overhang. So let something happen, let something material come out of it. It does look positive as of now. Okay. If you look at Biocon as a stock, as a company, they've performed well. Of course, the amount of spending that they've done on the R&D side is something that would start yielding benefits going forward. But as far as this particular piece of news is concerned, we would prefer something to come out of it before taking a call.
Pharma's been in news a lot lately though, hasn't it? So within the pharma pack, are you starting to look at any specific names otherwise?
So we've been quite positive on Aurobindo for a very long time. The company has had an excellent execution track record. They have a pipeline of 150 plus drugs which are awaiting under approvals, and they typically come in the second half of the year. And I'm really not sure why US FDA comes out with it in the Jan to March quarter, but they tend to do that. And so they've already seen a lot of approvals coming through, and they expect a lot of approvals to come through, which would help to drive growth. So that's a company which we've been quite positive on for a while, and we continue to remain positive on it.
Mr. Subramaniam, I wanted to, of course, it was the biggest news on that day. Then somewhere I think the market forgot it existed. Was Aditya Birla Novo and Grasim. But I'd not like to forget, because I think there are Grasim actually. See, there are two ways of looking at Grasim now, which is Grasim without idea. Grasim with idea, but maybe sold off to somebody. Some M&As always bring a very big upside to something, and Grasim then also holding a large financial holding company that could have a price unlocking. Just your thoughts on that, Mr. Subramaniam. I know they've denied that they're going to merge, but I mean, anybody would say that sounds sensible. Maybe they might not do it today, but eventually, I think obviously they understand the business better than us, and it's clear that there are going to be only one or two players, or it's going to cost you billions of dollars just to stay at the same place as where you were.
Probably the entire, the restructuring was done keeping that in mind. The Ideas, because Ideas certainly has some strained balance sheet, and it could do with some sort of help from some, rich cash cows sister company. So probably that was the idea in mind. And but if I were to really take a call at the current moment, since the news has been denied, I would just look at as that only the holding company position has changed from AB Nuvo to Grasim. But yeah, closer to levels of 4200, 4300 definitely warrants a buy. So, but I will be very much interested in that financial arm. I think that's the one which I think will be keenly one would be keeping an eye on. So broadly, that will be the one which I think the market could also be keeping an eye on. And as far as Grasim is concerned, lower levels, I think you will see some buying coming about.
Oh, I just want to take one stock, which is Oil Country Tubular. It really doesn't go very far, but essentially it makes pipes for crude oil companies, essentially undersea pipes and stuff, and V2 Retail and Kesar, because we are seeing a lot of activity in the guys who supply the transportation mechanism for crude and chemicals, and that's why Kesar Chemicals, and yesterday there was also one Agarwal Industrial Corporation, which also does supply chain for, or actually has storage capacity for bitumen. I mean, I was just wondering how this bitumen is stored. I mean, it's all this really gooey stuff. I mean, maybe they boil it and put it in a tanker. I don't know what they do. It'll be interesting to find out. Ruchit, if you have any thoughts on Oil Country, V2 Retail, Kesar Terminals?
Well, Ashu, all these counters are usually very low volume stocks. Even in Oil Country, we are seeing that today the volumes are there. But it's, I think, one of a day. Other than that, the trend for the stock has been down. So I think this is just a pullback move. I don't think one should get much excited about this up move. On the higher side, if the stock comes up to 32 or 33, I think that would be the maximum where the stock could get, even if this positive momentum comes in with good volumes in next couple of days. So I think not very much excited about this. Even in Kesar Terminals, we have seen overall the stock has not performed that well. The stock has been in a sideways consolidation phase. 280, 290 has been in resistance since last many days, and the support comes at 230. So some sort of consolidation would be there, but not those kind of stocks where traders should get in, just because the liquidity is very much less in both these counters.
Okay. Natasha, anything else that's on your radar that you'd like to run us through?
We're very excited about the opportunity on the auto ancillary space, and that's something that you had mentioned earlier in the show as well. Of course, one has to be very stock specific there, especially companies who have an excellent exposure with the larger OEMs in the country, companies like Ramakrishna Forging, which is largely into MHCV space, and you're seeing the turnaround happening on the LCV side as well. So that's a very exciting opportunity for us. Another one is Motherson Sumi. The company actually targets returns rather than just growth. So they're not going to be compromising on their margins and the returns at the expense of growth. But having said that, the inorganic route that the company has taken in the past, all of it has been led by the clients as such. So a very exciting opportunity to be in.
Okay, I think any other stocks you want to run through, Ashu, before we thank our guests?
Yeah, just two, Abha, and maybe I'll take both Ruchit's and Mr. Subramaniam's view on this. Yeah. Mr. Subramaniam, even when we look at finance stocks, there are some that are very pedigreed. So when you look at a Bajaj Investment in Holdings, a Bajaj Finance, LIC Housing Finance, but what's happening right now is that we're assuming you don't need a brand name. Nobody need to know any company. You just basically go and say, oh, just give me a housing finance loan. I've taken it. That's it. Is it so commoditized, or should the market give a different valuation to, let's say, a LIC Housing Finance or a Bajaj Finance?
I think basically the flavor of the market seems to be this, but at current levels, I think one needs to be a bit cautious and be only with the high pedigree stocks. And keeping that in mind, yes, LIC Housing Finance and maybe an India Bull Housing Finance, even that looks pretty decent, and of course it has its share of volatility. But one needs to keep, just be in with the select pack of companies rather than getting into the entire group.
I had a question for Ruchit on these two, Mr. Subramaniam, but we are completely out of time, so I want to ask you. I have no problem with Indiabulls Housing Finance, but since Indiabulls has listed real estate, or Indiabulls Housing Finance, or Indiabulls Wholesale, or Indiabulls Retail, whatever they call it now, Store One, I have not seen anybody making money. Indiabulls Power, except maybe they've made money. I see a lot of their buildings here, but as an individual shareholder, anything out there?
Yeah, I don't know what those other companies, but as far as Indiabulls finance is concerned, I think they have been the financials have been pretty decent, and Indiabull Real Estate, in fact, that's been one which has actually seen some sort of turnaround in the last few quarters and seems to be getting its act together. So these two companies, I think, definitely seems to be having some flavor for the market.
All right. Thanks so much for joining us, Ruchit, Mr. Subramaniam, Natasha, and running us through some of your strategies. We take a quick break. When we come back on Market Guru today, we'll be joined by Sanjay Kumar of PNB MetLife.